Good morning, Joseph here from Eightcap. Welcome to a new trading week. Thanks for tuning in to today's Asian session update for the Trade Zone Week Ahead series. We also conduct webinars during the middle of the week from some of our well-known presenters. So please keep tuning in as for the Trade Zone Week Ahead series and for our other webinars that we'll be presenting and reports throughout the week. So we'll start with Friday. So with the US employment data on Friday, we had average earnings coming lower, the NFP came in higher, and unemployment came in worse than expected as well. So the NFP, it came in hotter than expected, but nowhere near the level we saw in the last data we saw the month before. So now this did create not confusion, but a pretty interesting reaction. We did see risk rally after the release of the data, but those rallies were cut down late into the New York session as other factors came in, and traders also did look at some of the other influences and digested the data a bit. So it could be a case that what was expected didn't really come in as bad as what was going to be expected, but we did see, that high payroll figure and employment increase, which did give maybe a possibility that rates could, that the economy is not running as hot as was first expected. But definitely we did see a return to the US dollar late in the New York session, and sellers definitely came in and hit other risk markets late into the New York session. So US indexes, all the three major indexes finished lower. We see the USD finish higher, and we're looking at the USD now, and we can see that fight back on Friday after Thursday's key breakout. Now this morning we have seen the market open higher as well, and we're trading, we are seeing a bit of a test of last Thursday's high, but risk markets are trying to find a bit of momentum this morning. We can see the Aussie here is trading higher to the dollar, the euro as well, after a pretty sharp finish, a sharp pullback on Friday, and then a gap lower this morning, taking price well back below the parity point. This is an interesting position for the Euro USD, and we will be keeping an eye on it this week, and just trying to get that to zoom out a little bit on MetaTrader. So we are, like the weekly for instance, is very far away at the moment from the moving averages, so there could be a mean reversion with a bit of a pullback, but I'm not saying it will pull back today, but definitely we are at that point now where we're a fair distance away, and it does look right for a bit of a counter rally. We will need to see how the USD continues on today and for the next few days, just to see if dollar selling can fuel a bit of demand for the euro. The euro has a few things going on at the moment. Number one, rates are expected to go up. We'll get on to, there's a lot of central bank meetings coming up this week, but one of the key issues for the euro at the moment is gas supply. Nord Stream continues to be shut, and the German government is about to release a third relief package due to soaring energy prices. Now, gas is a very important factor in Europe, not only for heating but also for production in factories. And at the moment, there is just no gas. Gas reserves were seen around 85 to 87% capacity last week, but that obviously, without being replenished, could drop out very quickly, and it is creating a lot of worry in the EU at the moment. So we will continue to see if Nord Stream does come back on, but that's definitely a point at the moment for the EU this week that we'll be having a look. And this is on top of very high inflation in the EU, so rates are expected to increase to 1.25% in the EU later this week. So we will see if these factors can help the euro. Normally rate increases does help the currency, but with the damage that will be done with gas shortages and the pressure could be quite high, and it could continue to see the euro come down. And this is more geopolitical, but you'd think that with soaring prices and soaring inflation that will help the euro. But at this point in time, it did help it last week. We did see these moves higher with ECB talk of rate rises, but that was quickly cut down as the US dollar got back into demand, and we've seen now the euro back down at this support point. So really here's a bit of a defense point. We can see that just here. If the euro can hold here and then push higher, possibility this could become a support point. But yeah, if we do see a break below these lows, then definitely this current trend where the downtrend that we are seeing here, we'll be looking for that to continue after this last lower high and so it really bears really do need to break this low just to show that this move lower is going to continue. Now also, the Bank of Canada this week is set to raise rates up to 3.25%, and the local cash rate tomorrow, the RBA is meeting, and it's looking to rates are expected to increase to 2.35%. So the Aussie dollar at the moment has been really just trying to hold up a little bit firmer, but we are still seeing this downtrend. We're not saying we are going to get down to this point, but at the moment it is in a better position. We don't really have a clear downtrend at the moment. We still have a higher low at this point here above this low seen back in July. So we'll be seeing if Aussie dollar buyers can hold up, and if rates do go up tomorrow as expected or more than expected, we could see a further bounce on the Aussie dollar. So we'll see how tomorrow's RBA meeting pans out and what is really said in the statement in terms of future rates, if there's any hints or if there's any real good information about that tomorrow. So apart from they're the key things to keep an eye on today. We do have two bank holidays today, so it's Labor Day for the US and for Canada, so liquidity may be a little bit thinner with certain banks not trading today. And now we'll just touch on some of the stock indexes and get a little bit of a breakdown on last Friday's session. So we can see that session was a very strong reaction after the NFP, but then things did stop pretty quickly, and we saw some new weekly lows put in before we saw a bit of a fight back. At this stage in the day, the futures are trying to gain a bit of momentum. We are seeing a slight push higher on the NDX 100, the SPX 500, and the US 30. Gains at this point are quite low, but at also this stage as well, we did see some gains from risk to the yen, but at the moment there is a little bit of pressure coming in. So the Aussie was trading just briefly in the positive to the yen, the euro as well, but they've just dipped below. But the pound at the moment is holding quite well, and this is really the point here for the pound yen. There's been plenty of demand at this point around that 160.70 area, and we'll be looking to see if buyers can continue to hold out at that level, and possibly if risk markets do see a bit of a breather today, if we can see a bit of a push higher after Friday's decline. And just before we go, we're going to touch on a couple more markets. So this morning at the moment, gold is trading lower, but that's after Friday's fight back. There was a nice push higher. So gold's definitely reacting at the moment to some of the geopolitical issues between the EU and with Russia and the Nord Stream pipeline. We did see a nice fight back despite the USD strength late into Friday's session. And oil at the moment, we are seeing a gap higher after Friday's real flat session. We did see that real strong 3-day decline last week before we did see a bit of a stall at that 86.50 area, so that's definitely support at the moment, and we will see if this gap can be held, or if we do see a fill of that gap, then we'll be really looking to see if buyers can hold that fill and then push higher once again and maintain that support down at that 86.50 area. Now, just before we go, we'll touch on the crypto markets. So we're just going to have a look at the top 10 and 25. So at this stage in the morning, we are seeing some small gains on the top 10. We did see a stronger finish on Sunday after a bit of selling. There is this resistance area just here that we're keeping an eye on at the moment. So we really do want to see a break above that point there. I'll be honest with you though, just looking at this rally here, it's not a great one. If any of you have ever studied or looked into L. Brooks, he calls this a barbed wire pattern, and it's normally not a very confident pattern, but until we see either a break lower or a break higher, we'll just need to continue to keep an eye on it. It's definitely not screaming out anything right now, and there's a little bit of a warning there that the market is remaining in sideways trade, but again, we really, after we did see this pattern recently where we had this this one is definitely not as confident as this rally, but that was still a counter rally. We had a move down the step there, and we can see that previous support now becoming resistance. So if sellers really want to get this going again, then they're going to need to have a strong session, push lower and break through some of these areas down around that 10.312 area, just to really signal that this downtrend is going to continue. But for right now, I definitely think it's time to just give this market a bit of time and see which direction we are going to go in. If we do see it break higher, we'd want to see it close above these previous highs, and then I would prefer to see a reaction lower, which forms a new higher low, and then a new higher high to break above that previous breakout, just to signal that buyers are in control. It's a very similar situation on the Crypto 25. Yesterday's session was a little bit more higher than the top 10, but again, we are seeing a little bit of that congestion area that needs to be broken, and otherwise for sellers, they really do need to try and break some of these levels down here, just to show that they are going to try and get this downtrend back underway. But for now, it does look like a real clear-cut range, so that's definitely what we're seeing now on those key crypto indexes. So that's it's for this week's update. So yeah, again, as noted before, we run the week, the Trade Zone week ahead series, so please keep check those later updates out later today, and the rest of our analysis that comes out through the week via Twitter and on YouTube, and some of the webinars that we're doing as well. So we hope you all have a fantastic trading week, and until next week, good trading, and thank you very much for tuning in and watching today's video, and good trading, and bye for now.